Good afternoon, everyone. Welcome to Hit the Bid on August 15th. This is Ty Robbie with your Week 33 Market Watch. Today we're going to run through our charts and see what happened in these markets over the last week and see what we need to be ready for as we head into Week 33. So let's jump in and get started. First up, we got our October live cattle on the board. We did have an eventful week in this cattle market. Both live and feeder prices pressing down here into some new yearly lows, followed by some big news coming out of Tyson late in the week. This October live contract did see some nice balance action here on Monday and Tuesday. Price hanging out inside that prior week's range before hitting some resistance up here in the high 220s. Tuesday session did finish back here on those lows, giving the sellers the green light to take this market lower. We did see nice bears follow through throughout Wednesday and Thursday session, driving this thing back down towards 220. Thursday night, we got that announcement from Tyson regarding some packing plant closures, which kind of shook up the market a little bit, opening up here on Friday with a nice gap lower at 217, briefly undercutting this prior swing low from July and printing a new yearly low at 215.22. We did see a nice bullish response in the face of the bad news in this big picture downtrend. Typical bottoming event, typical capitulation action here, as we have seen some steady downside throughout the course of the summer. We haven't really seen much upside since this recent all-time high printed on the 1st of May. Since then, it's been lower highs and lower lows, but most of that selling pressure has come over the last 8 weeks. This thing's seen about a 12 or 13% discount along the way, all the way down to this new yearly low printed on Friday, followed by that bad news here late in the week as well. This market continues to find support inside this demand zone that was created late in 2025. Good buyer response here on Friday, even in the face of that bad news and all the selling pressure. Typical capitulation event here, breaking down some of the big guys as this market is looking like it's starting to put in a tradable low here. Typical bottoming action here, similar to what we saw back in late 2025. Over Thanksgiving weekend, we did get a packing plant closure announcement as well, which came within 2 days of this low we saw in Q4. That kicked off this nice rally and this nice uptrend that rallied us all the way back up towards these all-time highs. So not saying it's going to play out exactly the same way, but most tradable lows, most major lows come with some big bag news to really cap it off and really get that trend reversal going. We did see similar action here so far last week. Nice selling pressure early, but as the bad news came in, we did see a nice buyer response to the bad news, pushing back. Nice liquidity grab under this prior swing low here, pushing this market back up. Actually got record volume here on this October live contract, trade nearly 35,000 lots on Friday, giving the bulls a chance to use this as a tradable low. We still want to be cautious. This downtrend still remains intact. So if we do get any sort of offers below Friday's low at 215.22, look for that selling pressure to continue, and we could see that volatility pick up and this market get slippery back down towards $2. But at the moment, we did see a nice bullish response on Friday, and we want to give these buyers a chance to stage a rally attempt. Bids above 219.5 should open the door to 223 to 24. This has been a crucial spot over the last couple weeks. Prior resistance, also prior support. Either way about it, this has been a pretty important spot for the market participants at the moment. Look for this thing to be marked up to here. We'll have to wait and see. It's not going to be an easy climb out of here, but if the bulls are able to claw through this area as well, look for them to start pushing back up here towards this 50-day average and that 230 level. Bulls still have their work cut out for them. They still need to see this market get back above that 50-day average and that 230 line before we can start talking about a new uptrend or some sustained upside, but at the moment looking like we're getting a near-term low put in following Friday's session. We want to make sure that this buying activity can continue early into next week. We want to see a nice strong push out of here, make sure that this market is able to hold last week's low. In the event of that, we should see this thing start to build out some structure and try and get a nice trend reversal underway here. At the moment, though, that selling pressure still, or this downtrend still remains intact, and so we want to be cautious and respectful of that. Be defensive here, keep a tight leash on anything to the upside, and protect yourself, as we could still see some increased volatility following all this recent news and selling pressure. So be cautious, but we are seeing some good signs of life from the buyers here at the moment. I'll have to wait and see what this week brings, but if we get some early bids above 219.5 in the week ahead, look for the buyers to stage a nice rally attempt and try and get this market moving back up to the upside. Next up, September feeders on the board. Same action here for this feeder market. We did see some early balance activity before seeing that nice steady push down here towards these yearly lows, printing at 328 on Friday. Did get that gap lower, briefly undercutting July's low, but a nice buyer response driving back up here, finishing the week at 335. This market has been a little bit more range bound. These lows are, the line's getting a little blurry here, but we still continue to see good support off that demand zone that was created late in 2025, similar to this live cattle market as well. Heavy volume once again coming in here as well. Good capitulation event type activity, good bottoming event type activity. We want to make sure that the bulls can continue to defend Friday's low across both of these markets. But as long as they can keep Friday's low intact, they have a decent chance at staging a rally attempt. Look for bids above 335.40, which was Friday's high, to take this feeder market back up here towards the 340 to 350 area. This thing has been pretty sticky in the area recently, so wouldn't be surprised to see some more choppy action. But at the moment, we're seeing a good buyer response in the face of all that bad news and all this recent downside over the last 8 weeks. Good signs of life here from the buyers, even in the face of all this bad news, showing we should be getting a decent tradable low or a near-term low here in the near term. So be cautious going forward. We still want to be defensive if we do get some, if price gets slippery again below last week's low. But in the meantime, the buyers are stepping in and offering a decent chance at support here, and we'll have to wait and see. But this market's setting up for a nice little rally attempt in the week ahead. Next up, December corn futures on the board. We did have a pretty volatile week last week. This market hanging out in some tight ranges Monday and Tuesday before Wednesday's WASDE report. Saw a nice drive back up here into the 480s. Thursday and Friday just going back and forth here. This market finishing the week at 483.75. This market still remains a very directionless market, very choppy, and we expect to see that action continue. We're going to use 457 and 492 as our pivot points for the week. Look for this thing to stay range bound. $4.50 to $5 in general just has been the areas to watch here for this December corn contract, but we have seen this thing continue to probe some of these highs and these lows and seen some real sloppy, choppy action here for this corn market. Not expecting that to change. Look for this corn market to continue trading in some wide daily ranges, but still remain here between about $4.50 and $5. Next up, crude prices just seeing a pretty quiet, uneventful week. We did see an early rally back above 82 before seeing a little bit of resistance up here in the mid 80s last week. This market has been seeing some spikes from being involved in the news and whatnot in the Iran situation, but we still remain trading below 87, giving the bears the advantage here in the near term. Sellers still remain in control as long as we can remain below $84 to $87. Look for this thing just to continue to chop around these averages. Not a whole lot to be said. This crude market's just going to continue to chop up, but the sellers still remain in control as long as we are below this 85 to 87 area. Look for a slow, steady bleed back down here towards $87, but here we are seeing just kind of some big swings both directions. Not expecting a lot from this crude market at the moment. There's going to be a lot better opportunities to put your money to work. Look for this crude market to continue chopping up or a slow, steady bleed back down towards the 70s. And last but not least, our equity markets seeing some decent upside last week. Mixed results here. The Dow is the weakest of the bunch, but we did see the S&P and the Nasdaq pushing above some key levels. The S&P driving up here into some new all-time highs, printing at 78.38 on the S&P futures. Nasdaq getting a nice strong push above 30,000, which has been a key level here over the recent weeks, the last month or two here. Nice strong push back above it. Friday's session was uneventful. We did see the Dow weighing heavy on things, but the Nasdaq and the S&P just kind of hanging steady here near these all-time highs. Nasdaq still off of those highs, but being back above 30,000 gives the green light to the bulls. And this Dow index still remains in a nice uptrend, just seeing a decent little pullback. Nothing major, just a nice choppy action here. Tight daily ranges, nothing super concerning. Typical action that we see in a big picture uptrend. We are seeing some good participation from these underlying names. Nice jumps over the last couple weeks following those earnings reactions. Good support here on some of these names as well. Some of them, like Tesla, still remain in a big picture downtrend, but we are starting to see a little bit better participation from these big picture, or these big pieces of the puzzle. The uptrend remains intact. Pretty low volatility action here across these indexes, which is a good sign, typical of what you see in big picture uptrends. So we expect to see that slow, steady grind to the upside continue here. This participation keeps widening here across this market. There are better spots to be putting your money. We continue to see better opportunities show up every day, so good signs of breadth here in this market. Look for the uptrend to continue here across both or all three of these indexes. We should see the Dow try and get some bids early in the week ahead following this recent pullback. If we can find some support down here at that 20, that'd be great. And if we can get this Dow rolling to the upside, that should give the Nasdaq the kick it needs to get back up to these all-time highs, and the S&P should just keep on pushing here. So nice consolidation throughout the summer months following the spring's big markup. We did see a nice strong push out of these highs here in the S&P. The Dow still remaining in a nice uptrend. The Nasdaq getting some nice footing back above these averages as well, and clearing 30,000 is a good sign. Bulls have the ball in their court here at the moment, and we should see these equity markets continue to climb and see some good environment to keep your money invested here going forward. Look for some more upside here as we go into the late part of the summer. That's all we got for tonight. Thank you, everyone, for tuning in. We will catch you Monday evening for closing comments. Thank you and have a good weekend.